Joining us now to discuss the crypto markets is Matt Weller. He's global head of research at Forex.com. Welcome back, Matt.
Hey guys, good to be here.
Good to see you. Okay, so here we are. Bitcoin's near 23,000, Ether above 1,600. What's really driving it? Is it the macro issue? Is it the macro issues, or is it just kind of market dynamics within crypto? Potentially even a couple of large players maybe helping to prop up prices, as has been alleged on crypto Twitter.
I would say it's more the market dynamic component. If you look at some measures such as on-chain leverage and positioning, we've seen really positioning fall very rapidly, indicating minimal speculation. There was a large short position built up that's since been liquidated. So that's kind of what sparked the rally. And now I think we're getting just a small element, certainly nothing like we saw last year, but a small element of that FOMO from traders who thought that they would have all this year to buy near the lows. Now that we start to see prices picking up, we haven't really seen much of a dip. We're starting to see a lot of those traders throw in the towel and just jump in to make sure that they don't miss the big surge off the bottom that we're now seeing.
So basically, you think that the short liquidations may have prompted a lot more buying than would have been expected. Now, we look at the Deribit. We actually have a full screen here on some of the options. That some of the volume here. The volume is about 4.25 billion, and that's the highest since FTX went collapsed. So, and Deribit's one of the largest exchanges here. So, what does that tell you? What are the option market, especially because we're seeing again a lot more in the call side of it now than we saw previously? What do you think is happening here? Are they taking those positions on in the option markets? Are they paying up there, or is it? Do you think that some of it is just basically maybe even selling calls? What do you think is driving here?
I'm by no means an expert in options on the crypto market, but I would say one factor that's maybe contributing here was the opportunity to get some cheap convexity, or essentially after this period throughout December where Bitcoin and the rest of the crypto market saw very low volatility, some of the lowest we've seen in years. That made those options very cheap. And now that we've seen price start to pick up and volatility start to pick up, it's sort of a potentially low risk or cheaper way to get exposure to the upside. And I certainly think that has driven some of the attention in the options market.
Do you have a sense of who's participating right now? Is this retail? Is this institutional? What's your sense of the breakdown of who's kind of driving this rally?
Well, we've seen retail just got absolutely burned throughout last year, and I don't think there's those compelling new use cases yet that are driving retail back to the market. It seems like the only people who are still sticking around on the retail side are those who have been through multiple cycles, understand how volatile this market can be. So I think it's probably more attributable to institutions. Recall that these institutions move so slowly, and they have to go through a board and put together a compelling case and get approval to gradually increase their allocations. And those decisions are not made lightly. So, many of those processes started back in 2020, 2021. They're still ongoing and still giving institutions a chance to buy, for example, cheap Bitcoin or Ethereum. And I think that's really what's put a floor under the market and could continue to support prices as we move through this year and beyond.